Hello, traders. It's 8:02 a.m. Chicago time on the 20th of May 2019. Happy Monday to all. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Well, this morning, more news to digest on the U.S.-China war, trade war. Clearly risk off. The DAX is leading the market down 1.85%, 225 points, followed by the Euro stocks about a 1.5%. And then NASDAQ. The NASDAQ has taken a hit due to some moves against the Chinese technology company called Huawei, where Google and others have stopped supplying them with maybe parts, I'm not sure, but essentially this trade war is becoming a technology war. The Chinese have been releasing press releases that are stating that the U.S. is using technology as a way of forcing China to compromise, and that they won't. China accused the United States of harboring extravagant expectations for a trade deal underlying the gulf between the two sides as U.S. action against China's technology giant Huawei began hitting the global tech sector. Trade uncertainty darkens U.S. small caps outlook and pretty much causing all these markets to go lower. Japan's Nikkei edged up on upbeat economic data, while shares in mainland China and Hong Kong fell on trade tensions. And that's where we are. So it looks like we are really responding more to news as we have been. Looking at the action overnight in the S&P, and we see that just it's been falling and unable to pull back up. So that's where we are. We're gapping down this morning below the S&P low. We're trading at 28.38 in there. Okay. So there's a so this news where China's foreign ministry spokesman Liu Kang said we will wait and see for China's countermeasures on Huawei, urges U.S. to stop provocative actions. Chinese Navy warned U.S. ship to leave when asked about U.S. Navy ships sailing in South China Sea. So there's just a lot of stuff going on there. It's pretty scary business. Reportedly, China to suspend business with all suppliers who agreed to halt supplying Huawei, may temporarily hike tariffs for Apple, and so on. So this is just an all-out war here. It was of words, but now it's a little bit of trade actions, economic actions. And so that's where we see the NASDAQ down 126 points. So that's what we have to deal with today. And, of course, throughout the day, this is going to be the focal point in terms of news. And so as that stuff comes out, we're most likely going to see a response. Let's take a look at what we've got. Since it's Monday, let's review the big pieces of the week. Tonight we get the Australian meeting minutes, RBA meeting minutes at 9:30 Eastern. Tomorrow, high-tiered economic release out of the Eurozone, consumer confidence for May expected at 10 a.m. Eastern. Balance of trade in Japan expected at 7:50 p.m. Eastern. And then Wednesday, we get the inflation rate out of Great Britain at 4:30 a.m. Eastern. The FOMC minutes in the U.S. at 2 p.m. on Wednesday. Thursday, we get German GDP growth, market manufacturing in Germany, and IFO business climate. Those come out at 2 a.m., 3:30 a.m., and 4 a.m. respectively. And then inflation rate in Japan at 7:30 p.m. on Thursday evening, 7:30 Eastern. And then finally, Friday, we get durable goods at 8:30 Eastern. So if you look at the calendar for this week, really the FOMC minutes and EU consumer confidence, the rest are not, it's essentially a very, very light week in terms of economic releases. And it's likely to be driven by what we just talked about, the news-based items. Let's get into our review. We were opening below the low of Thursday on Friday. The expectation is responsive buying. That's the key expectation. It's either it's likely to do it by pushing the overnight low at 28.53 and then pushing back up to about 28.86. Or it might push down, test, and drive. That would be scenario 3, and likely to push us into 29.18. And then the failure scenario is one that's responsive up into Thursday's range and then pushes back out to 28.20. Here's what actually happened. We got we got an immediate response. It looked like somewhat of a drive. We did not push down into. We actually opened right on top of the overnight low, so we ended up kind of tagging the overnight stat anyway. The market dropped a little bit in between the time when I did the scenarios and in the open. And then we immediately became responsive, and we went to 28.8750, expected 28.86 or so. And then from there, we petered out and then ended up finishing down. This is a pretty bearish close here. We finished below the mid, below VWAP, and established a point of control down again, down below. So we have a lower high, lower low, lower value, lower point of control. This gives us a bit of a topping formation coming out of Friday. So here's the push up, the retest fails, and then we start to make a corrective move before the market closes. And then this morning we're trading down here at 28.40. The low is 28.36. So overall, just looks weak. It finished weak on Friday, although we got close to the 2900, but last week put in a lower high, lower low, lower close on the weekly. The weekly's on is one-time framing down or is on a downtrend overall. So that's where we stand. As we push lower, assuming no news that's likely to pop us higher, we have quite a bit to do down below. We'll talk about that in a minute. So let's carry that into the overnight. So this is Friday right here, and this is the overnight session. Volume's a little more than twice the expected volume. There's quite a bit of activity. We tended to drift up on the reopen. And then the Asian session was sideways, and then the European session was started right here. The European session started right here, tested back up, attempted to test back up, and then from there it's been selling, very methodical selling, by the way, just impulse pullback continuation that turns into an impulse because it's larger, pullback continuation. Looks quite bearish. 3 distributions overnight, really. So it's in price discovery mode. The market's not finding the opposing force, the buyers, and so it continues to advertise prices lower. We're opening right near the one volatility sigma, closing sigma already. So we can see already that there's an imbalance, and it's to the short side. Today is one of those days it's very important to watch very carefully, for what kind of a response happens at the open. It's going to be very, very telling. If we get a response that is on the buy side that fails to continue, then I'm looking to only trade from the short side. I would only advise trading from the short side. and you do not want to fade and buy long. If we do get a buying response and then the pullback, the sell response is weak, and then we have a continuation to the buy side, then pay attention to the prices above, mainly the 2861 area, which is around the close and the point of control of Friday. Once that's assuming we get back into the prior range, which is 2852.50 or higher. So that's where we stand. That's where we stand right now. And so here's what the heat map's showing. Since the open. So here's the open at 6 p.m. Eastern, 5 Central. We drift up. Pretty good volume right in here. Good push. This looked pretty solid. And then from there, you could see that there are very few dots. You see the colored dots. You could see more of the yellow last. And overall, it's just not much activity between 10 p.m. Excuse me one second. Between 10 p.m. my time and the open of the European session at 1 a.m., which is the Treasury open in the European session, you can see there's not much activity. And then as soon as the Europeans open, they pull right back up to the point of control. And then right there, this is where all the press releases and stuff from China came in, and there's quite a bit of volume that went into that. It crushed the bid. If you look at this area right here, you could see that it's really well bid right here, and it just pushed right through, and there are collisions all throughout. This is going to be an important area on the way back up. You might want to make a mental note of it. 64 to 66 on the way back up. The retest is likely to show some response there. So that's where the big move is. You notice the dots. These dots are set to 50 or 100 or better. So there has to be a total of 100 contracts traded or better for a dot to show up, just to filter out the noise. And again, there's your 66. See that offer? This was a bid before that was hit. See that offer come back in? Okay, so we need to keep an eye on that. Then once this bottom's put in, you can see there are much fewer dots. There's less action. The market's already made its move. Those who are trading the overnight session were sitting and twiddling their thumbs at that point until the next move, which takes out the low. We take out the low right here, and you can see the stop run. You can see these collisions, the stop run right underneath this low here. We're coming into, and it was coming into a long-term bid. This is a full depth chart. That bid cancels, the market goes sideways, and it brings us to the present moment, where there's a little bit on offer above, but overall it's a pretty noisy chart in terms of the order flow and the depth for this morning. I do expect some sort of a response when we open, but we'll see what that looks like once. This is one of those things where it's a news-based event, and we just need to chill for the first 15, 20 minutes and see what it does first. So in terms of what we're expecting for today, so the primary scenario as usual, we're using this Wednesday for a template day, and we don't have very much in terms of what the profile offers on this day. This is likely to find its way down before it finds a bid. If it does, I'm looking for a reaction of potentially 28, 26, which is a really minor stock zone, for a reaction back up into the overnight point of control. And then from there, I'm expecting it to respond a little bit towards 52.50. And if it does get through there, 58's next and 61. But that'll likely be the extent of it, barring news. I don't think there's much that's going to be done about changing the fate of Huawei and what's going on there. And so I think there's just more likely there's going to be more bad news than good news. The alternative is a response that's immediate. I'm looking for this to be a fairly choppy response. I'm looking for a push back into 53. Note that the low here was the point of control of Wednesday. I'm looking for a reaction right here, and then it might poke into the range, but overall, it's probably going to be a sideways day on the second scenario once it becomes responsive. I mean, think about it. We've traded these prices before. If you're a long-term macro type fund needing to deploy 250,000 contracts in EES, would you hold and wait to buy because of the way it's configured, or would you see these as advantageous prices? We've already traded these prices. This isn't really a discount of any kind, and more likely than not, I would expect that everybody's going to hold on to their cash until they figure out what's coming next from this mess we're in with the trade war. That's where things stand. Good luck today, and I'll catch you tomorrow morning. Take care.